What is up, gang? Nick here. In today's episode, we're obviously covering everything you need to know coming out of NIO's Q4 earnings call. I was surprised it was released so early. I was actually going to live stream this. It kind of caught me off guard. However, here we are. I will have an in-depth breakdown coming out tomorrow, but I wanted to get all of my early thoughts out to you as quickly as possible. Webull is giving out 2 free stocks worth up to $1,850. All you have to do is 1, sign up, 2, open an account, 3, deposit in at least $100. The link is in my description. Soft friends soon, guys, don't sleep on it. Check out our Patreon page if you want to see more content under the radar stocks behind the scenes. This also gives you access to our private Discord channel where you can see all of our trades in real time. Our portfolios, the chat is always popping off. It is an absolutely unbelievable community. Thank you so much to everyone involved. It really means the world to me. All right, no time to waste. Let's get right into it. Okay, so here we can see NIO's earnings, and I have a ton of thoughts on this. I'll break it all down. There's the good, the bad, and the, somewhat slightly ugly. All right, so the first thing I want to touch on is their vehicle revenue. I nailed this one right on the head. In my Q4 prediction video released a few days ago, I anticipated 947 million. You can go back and watch that. We received a value of 946.2 million. So nothing was out of the ordinary here. This basically tells us that the average vehicle sale is still hovering around the 5,000 USD range. Now, a factor I was focusing on in the previous episode was their other sales. I think this is a dark horse that NIO has up their sleeve in the coming quarters. I thought this would increase from their previous value of 5.73% of total revenues from Q3. This other revenue, which I do expect to continually contribute an increase in proportion to NIO's bottom line, was marked in at 71.6 million. I had stated that I thought we could actually see figures up to 70 million, so I was also close on that. They do have some credits in here too, so keep that in mind. What this means is that, as anticipated, other sales are accounting for more than expected. I've stated before that I think battery as a service and their battery swapping infrastructure will add to their bottom line in a continuous manner. With more vehicles on the roads, we see an increased contribution from other sales. This also means that many people's free swaps are coming to a close and people are going to have to start paying for swaps. This was part of their business ops. All things looking good so far. Let's keep going through. All right, so we see NIO posted total revenues for the first time above that elusive $1 billion USD mark. They posted $1.017 billion, representing an increase of 46.7% from just the previous quarter. That's Q3 2020. This is a 133.2% increase YOY. This was mostly due to the implementation of double shift mode that Lee Bin and management instilled late last year to catch up to the increase in demand. I do think this is a really strong note and a big takeaway from this quarter. Now, one of my favorite elements from this earnings report is their vehicle margin and especially their gross margin. Their vehicle margin came in at 17.2% and their gross margin came in also at 17.2%. I have predicted figures of 18 and 16% respectively, so well within the ball range. Now this is quite substantial as both dramatically have increased from Q3 and are moving in the right direction. I think this is a really positive note and takeaway from their HQ and earnings report. This is really what we want to see as investors, and I am hoping for figures around 20% moving into Q1 2021. I'll get into that on tomorrow's episode. Once we get a high margin vehicle coming out like the ET7, which is slated for delivery in Q1 2022, this will really bring up the vehicle margin. This will be great for NIO's bottom line in future quarters. Now we see the loss from operations moving in the right direction, a decrease in loss of 1.5% from the previous quarter. Not significant, I would have hoped for slightly better. This was where I had been hoping they would have made it more of a dent, but I'll get into why this happened shortly. Their net loss came in at 212.8 million for the quarter, an increase of 32.6% from just the previous quarter. This is more than I was anticipating, I'll be honest. Now the basic and diluted net loss per share came in at 0.16 and 0.14 cents per share respectively. This is where we missed the analyst's call and by quite a substantial margin. I'll get into this. They, as of this year, have an extremely substantial cash position. Let's not forget about this. $6.5 billion USD. This is the largest of EV Chinese startups, notably Li Auto and Xpeng. They have dug the well before they need the water. This is important. They have a war chest on hand ready to go. Now let's get into why NIO's numbers are down. It's important to put everything into relation with one another. Let's start with the cost of sales. They posted $842.8 million loss. This was a 39.6% increase from Q3 2020. Now this can actually be attributed to the increase in deliveries. With more vehicles comes increased costs. Now NIO's operating expenses is what really drove their EPS into the ground, which was slightly unexpected. They posted R&D of $127.1 million, an increase of 40.4% from Q3. I think this is primarily due to their advancements in autonomous driving software and their ET7 related expenses as well. I do think this will actually increase in the coming quarters, so don't expect this to just vanish or decrease anytime soon. NIO is a startup company. The R&D will cost a lot to continually expand and develop more products. This is all part of the deal. This is what we signed up for. They are a startup company. They do have a huge overhead and they do need to continually make products. We need to keep everything into check. It's okay though. Now moving into the February numbers, just as I'd warned all of my subscribers, we did see that significant pullback. I had stated a number of around 5,500 was to be expected, and we landed at a figure slightly higher of 5,578. I had seen a lot of people on YouTube blindly pumping and stating that NIO would yet again hit a record delivery month. However, this was never going to happen. This was not in the cards, and these people had not done their DD. We see a repeated historic drop in vehicle sales in February in mainland China, and this is due to a multitude of factors. We have a low day count, we have the Chinese Lunar New Year holiday, we have increased travel, and NIO themselves had forecasted this dip in deliveries. We knew it would happen. The key thing here is to look at the growth of the company with a wide-angle lens. Don't get too minutely focused and zoomed in the volatility and day-to-day swings. This number is still very positive in my point of view. This represents an incredible 689% increase from just this time last year. Yes, I know there's factors into that. The health situation was taking hold, but they're on the right track. Now, zooming out on the entire earnings report, I do not think this is personally a reason to panic. I don't. Yes, we did miss earnings, but there are a lot of bright notes to be extracted from this report. NIO is delivering more vehicles than ever and on a continual basis. We need to not factor in February. This is standard across the board. They are generating now more than $1 billion in a single quarter. Their cash position is extremely strong at $6.5 billion. The continual buyback from NIO China, with NIO ADR now owning more than 90% of the company, is also extremely positive. Looking at their share price, we do see a marginal sell-off occurring, and in my opinion, that's okay. Let them sell. I am not personally worrying. So many investors simply base their own investment off of whether a company hits or misses an EPS target of a Wall Street consensus, and that's it. Let them have their sell-off. We're down about 5-6% after hours. We'll need to really see where shares stabilize in a few days to get a really good view. I think this is strictly 100% based off the company's EPS miss and not really due to the actual meat of this earnings report. I do think this is overall strong. Yes, we did miss. Yes, I would have hoped for slightly better EPS, but we are moving in the right direction. The recent Europe announcement is quite good news as well. We will see Oslo, Norway likely in the latter half of this year. Let's zoom out and look at the long-term projections of this company and where they could eventually land. They are looking at Q1 vehicle deliveries to be around 20,000 to 20,500 vehicles. This is incredible and shows just how strong the company's outlook is. This is great guidance in my opinion. Like I said, I will have a full detailed overview tomorrow, so make sure you subscribe, smash the like button for the YouTube algorithm. Me personally, I'm not worried about this in the least. I actually think it's a good earnings report. Look at that revenue. Don't forget about the Webull promo. You get 2 free stocks worth up to $1,850 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. They are a 0% commissions trading platform. Check out our Patreon page. We have under the radar stocks, more content behind the scenes, and this also grants you access into our Discord channel. This is where you can see my real-time trades, our portfolios, and the chat's always popping off. Thank you to now the more 1,500 members we have. What an awesome community this is. There's money out there. Let's go make it together. Anyways, guys, I'll see you all tomorrow. Take care. Happy trading. Cheers.